Welcome back to our channel, Clear Value Tax. My name is Brian Kim. I'm a certified public accountant and one of the partners at our tax practice. So this is going to be a quick tip video about the sale of properties, but 4 instances in specific. So the first one would be sale of a primary residence. The second would be sale of a rental property. The third one would be 1031 exchange. And the fourth one is a home flip. Okay, so it's going to be a very quick tip. If you want to know more in depth about one of these, please leave me a question or comment below. I'd be happy to make a video about one of these as well. Okay, so the first one is the sale of a primary residence. You know, as many of you know, you can exclude the primary residence exclusion. Lets you exclude up to $250,000 for a single, $500,000 for married filing jointly. So even though that you're within those limits, so you know it's going to be a tax-free gain on the primary residence gain, you should still report it. If you got a 1099-S, you have to report it. If you don't, you're going to get a nasty letter from the IRS saying that you owe up to, hundreds of thousands of dollars because they're going to think the whole home sale was a gain. So if you got a 1099-S, or if you just want to report it anyways because you fall within the exclusion limits, just report it because, one, if you got the 1099-S, you have to, and second, you don't want that nasty letter. So just report it. You know it's going to be all tax-free, but just make the adjustment. So please report it. So second is, the 1031 exchange. What a lot of people, they don't know with the 1031 exchange is that, I'm going to sell it for a gain, and I'm going to buy a new house within the time limits. It's going to be a 1031 exchange, and everything's going to be good. It's going to be tax deferred. No, it doesn't work like that. You need to use a third-party intermediary. You can't just sell the home and then just continue on as normal and then just buy something, within a few days. No, you got to do it properly through a 1031 intermediary, and that money can never touch your hands, which means that you're going to be working with an intermediary for you to do a proper 1031 exchange. So if you're thinking 1031 exchange, just know that you can't do it yourself. You need a third party, to provide you the 1031 exchange services. So if you're going the 1031 route, you need someone to facilitate that, to be the intermediary, the third party. And there's even restrictions on who your third party can be. So just please be mindful of that. If you haven't explored the details of a 1031 exchange, then please read up on it before, acting upon it and getting yourself into trouble and disqualifying for the 1031 exchange. Okay, the next one is going to be sale of rental property. Just know if you're planning to sell the rental property, hopefully you're doing this beforehand. If you want to see what the tax consequences are, please take into consideration the depreciation recapture. So basically what that is, it's the depreciation deductions that you were taking throughout the course of when it was a rental property, that was benefiting you, or it's been accumulating in your accumulated losses, which you will be able to use upon disposition of the sale. However, please take into consideration the depreciation recapture, and that's taxed at 25%. If you don't know what I'm talking about, and this doesn't make sense to you, well, please look into it or ask your accountant or ask me, because, each year that you've been receiving the depreciation deduction, it's been adding up. There's a running balance on your depreciation recapture. So if you're not taking that into consideration, well, then you can have a big tax bill, waiting for you, and you don't even know it. For example, let's just say you bought a home for $300,000 and you're renting out a rental home. And then you've been taking a depreciation deduction for 10 years. Okay, if you sell the property for $300,000, in 10 years, then you did not break even. You probably have a really big gain and you don't even know it because the depreciation reduces your cost basis. That's depreciation recapture. So please take that into consideration, the depreciation recapture, or ask your accountant about it. Okay, and the last one is a home flip. So what does this mean? It's you're buying a home and your intention and motivation is to fix it up as quickly as possible, put it in the market, and sell it as quickly as possible. So you're not trying to have a rental property. It's not, a long-term hold. It's not a capital gain, basically. If you're going to do a flip transaction like this, just remember it's taxed at regular, ordinary income rates, and it's subject to self-employment tax as well. So it's not going to be a capital gain. If you're doing a flip transaction, and even if you held the property for more than a year, which would be bad because the whole point of a flip transaction is to sell it as quickly as possible, it's going to be regular income on the Schedule C. So it's not going to go on the Schedule D. It's not going to be a capital gain. It's going to be regular, ordinary income on the Schedule C, subject to self-employment taxes. So just keep that in mind. Take that into consideration. So if you're expecting the 15% or 20% long-term capital gains treatment for a flip sale, well, I'm sorry to disappoint you, but that's how it is. Because when you're trying to do a flip transaction, it's a business. It's not an investment. It's a business. Your cost of goods sold is the home. Your home is technically your inventory because you're in the business of flipping the home. So the house is like your inventory. So it's a business. It's not an investment. So just take that into consideration. Okay, so those are some quick tips about those 4 types of property sales upon the disposition of those. So hopefully you find that helpful. And if you find it helpful, please give us a like or a share. We'd highly appreciate that. And please feel free to subscribe to our channel because we're going to make many more videos about tips and advice about how to, best navigate your taxes and just advice about how to lower your taxes and, of course, tax strategies as well. Thanks so much for tuning in. We look forward to making more videos.